is Mark. I'm head of investor relations and communications at DEUTZ. I'm happy to present you our Q1 2025 results. That's our typical disclaimer. Coming to the important numbers, one has to say that we've shown a robust performance in a continuously challenging environment. So new orders were up quite significantly by more than 30%. That's driven by the contribution of our recent acquisitions. Year on year, like on like, the development was more or less flat. Good news on the revenue side, we could increase the revenue by 7.5% in comparison to last year's Q1. That's due to the strong service business that is continuously growing and also the acquisition side. Organic growth was slightly negative. That leads to a quite robust EBIT margin of 4.3%. That's less than in last year's Q1 when we had better sales side, but that's quite resilient, 4.3% for the economic conditions. And very good news on the free cash flow side, which was with more than 20 million euros significantly up. Yeah, I think we can show more progress. We can show that we are progressing with our Dual Plus strategy despite the still volatile environment. So the business unit Energy continues to perform very well after the acquisition of Blue Star Power Systems last year. We recently acquired a startup, very innovative startup in the Netherlands. That's UMS. We expect the closing to take place in the second quarter. And we consolidate for the first time AGS emission technology, a specialist for after-treatment systems. We had a very successful Bauma trade fair, biggest construction trade fair world in Munich recently, and we got a good impression of our customers that sentiment turning towards a better second half of the year. And given the volatile environment, we are continuously working on our cost program that's called Future Track. We are on track here, lowering the cost base by 50 million euro until the end of 2026. Being important for Q1 and the rest of the year, that's the US. That's a cornerstone of our Dual Plus strategy. We expect the US to grow despite all the challenges like tariffs and political uncertainties. And especially for our business model, we expect the combustion engine in the US to be longer in the market than in other areas. Half of our business in the US is locally driven. That is the case for services and the energy business with Blue Star Power Systems. And we expect the markets to grow in 2025. I just mentioned the recent acquisition of Urban Mobility Systems, UMS. That's an innovation leader in battery electric drives, primarily for the off-highway sector. You can see some of the application here, excavators, crawler cranes, special equipment. It's a Dutch company founded in 2016. The founder, Lars Kool, will stay with DEUTZ, and we are the ideal partners to scale. One part of the business is hybrid drivetrains with a range extender that can even power bigger construction machines, for example. They get an overview of the revenue of the business of UMS. UMS has successfully electrified more than 200 machines, and the revenue in 2024 was around 10 million euros. There is an order book with letters of intent in the high double-digit million euro range. UMS also offers opportunities in the defense sector. There are certain initial feasibility studies. You see the Bushmaster here, originally built by Thales, where we can supply with UMS a hybrid solution for tactical reasons. Electric drive allows for lower noise signature, which is important for defense vehicles in the field. I mentioned that we're on track with our Future Fit cost program, 20 million of the 50 million that we want to achieve in 2026. We already want to achieve this year in 2025. And we are on track in the first quarter. So 180 FTE of 300 FTE of the program are already signed or clearly agreed on, or colleagues have left by fluctuation. And total costs for the program we expect to be at around 25 million euros, and the respective provisions are booked in Q1. And that's an attractive payback period we expect here of 1.5 years. We're talking about our core business, engines and services. We could significantly increase the new orders for the reasons mentioned. Services is continuously growing, and also the service for the Daimler Truck off-highway engines we've acquired last year from Rolls-Royce Power Systems are now fully established. The new solution segments, that's divided into energy with Blue Star Power Systems in the US, DEUTZ in Northern Africa, and our Chinese business. There are the consolidated new orders, revenue, very strong. New technology, that's our business with the sustainable technology. The revenue has increased here, but as expected, we still have a loss, and a total for solutions that leads to an adjusted EBIT of minus 7.5%. If you look towards the revenue by regions and by application, you can see that Americas pointed out still growing region. Germany, due to the acquisition of HSS emission technology, has also increased, still in a difficult situation when it comes to the construction applications and the agri application. And as I pointed out, we hope to see a better economic condition in the second half of the year, a recovery. Yeah, we can clearly confirm our guidance despite the macroeconomic uncertainty. Our guidance, just to point that out, revenue-wise, that are 2.1 to 2.3 billion euros. We want to reach an adjusted EBIT margin between 5 to 6% and want to generate a free cash flow in the mid-double-digit million euro zone. Just one additional hint on our upcoming general meeting next week on May the 8th, where we want to propose a dividend of 17 cents per share. That's in line with our new dividend policy that, in a nutshell, says we want to have a stable dividend. We want that our shareholders profit also in times of transformation from our business. And if possible, we would even like to increase the dividend. Yes, and if you want to look at further information, please check our annual report, which you find on our website. Thank you very much and hope to see you soon.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.